The stock market is rigged, right? Wrong. New investors just keep making the same mistakes over and over again. Today, I'm breaking down the 7 biggest investing mistakes beginners make. And if you avoid these, you'll save yourself years of frustration and potentially thousands of dollars. I have had to learn the hard way, and I am here to save you all that pain. Stick around to the end so you don't fall into even one of these traps. What is the biggest investing mistake you have made? Let me know in the comments below. Let's get to it. Mistake number 1, and before you even start investing, you need an emergency fund. Without one, the first unexpected bill will force you to sell your investments at the worst possible time. That's not investing, that's gambling with your future. Shoot to have 3 to 6 months of expenses saved. Mistake number 2 is buying whatever stock is trending on social media. This situation almost always ends poorly. By the time most people hear about it, the price has already spiked. You end up buying high and selling low, the opposite of what you want. Do yourself a favor and invest in real companies for the long term. Mistake 3, not diversifying your investments. Putting all your money into one stock is risky. Even great companies can collapse. Diversifying into index funds or across different sectors protects you from one bad decision wiping out your portfolio. Be sure to spread out your money. Mistake 4, not admitting your mistakes. Every investor is wrong sometimes, even Warren Buffett. The difference is admitting it early. Beginners often hold on to losers hoping they'll bounce back. The stock continues to drop, but you continue to hold and lose more and more money. That denial costs more than the mistake itself. If you make a mistake, own it and move the money to a better spot. Mistake 5, selling too soon. The market rewards patience. Beginners panic at the first dip and sell. But if you had just held through the noise, you'd likely see long-term gains. Time in the market beats timing the market. See dips in a quality stock as a buying opportunity and train yourself to power through down days. Your future self will thank you. It's also smart to automate your investments and not worry about buying and selling all the time. You can invest weekly, monthly, or whatever time periods works best for you. This takes a lot of the stress out of investing and allows you to continue to profit with a clear head. Mistake 6, ignoring the impact of taxes. You might make money on a trade, but after taxes, you realize you didn't profit nearly as much. Beginners forget about capital gains taxes and it eats into their returns. The best advice is to shoot for long-term gains. If you hold a stock for a year before you sell, you are subject to long-term capital gains instead of short-term. This lowers the amount of taxes you ultimately owe and increases your profit. Always factor in Uncle Sam and get yourself an accountant if you need help. Finally, mistake 7, not having a plan. Investing without a plan is like driving without a map. Are you investing for retirement, a house, or short-term growth? Without clear goals, you'll chase random stocks and constantly second-guess yourself. Build yourself a budget, continue to add to your investments, and make this a lifestyle, not a quick fix. Avoid these 7 mistakes, and you'll already be ahead of most beginners. If this video helped, hit that like button, subscribe, and turn on notifications so you never miss another beginner-friendly investing tip. Want to learn more about what is the difference between a stock and an ETF? Be sure to check out this video here. See you in the next one.